Well, yes, there have been a slew of downgrades coming in for the IT sector, and yet again this morning Morgan Stanley has written a note downgrading a whole host of companies, and the reason are similar to what we have been discussing. First up, they expect that the earnings downgrade cycle is likely to continue. In fact, it might worsen going forward. Now, they say that we have seen a bit of earnings decline, downgrade this year, but that has been on account of the margin headwinds that the street was expecting. But going forward, there will be questions which will be asked about FY24 demand environment as well, and that would drive further downgrades when it comes to the earnings going forward. In fact, they believe that for FY22 to 25, earnings might be posing high single-digit growth rather than the double-digit growth that the street has been banking on. Secondly, they talk about valuations. Now, valuations have come off materially this year, given the fact the stocks are down anywhere between 30 to 50% this year itself, but the valuations are still more expensive than the 10-year averages, or even when you compare it to the pre-COVID levels, the valuations are much more expensive. And given the fact that we are in a rate upcycle environment, they expect that there might be some valuation tapering that might happen going forward as well. In terms of the other internals, they say that in a recessionary environment, there might be a bit of vendor consolidation that might happen, and that augurs well for large IT companies versus mid-cap IT companies, and that's why they are more positive on larger companies, especially on Infosys. And going forward, they see a bit of headwind for likes of Wipro as well as HCLT. That's the reason they have downgraded both the counter. And in fact, for Wipro, there is a double downgrade which they have done, all the way from overweight to an underweight now, and the target prices have also been cut sharply. The target price is now down to around 355 rupees if I remember it right, and that compares to 640 rupees that they had earlier. For HCLT as well, there has been a sharp cut in the target price, all the way from 1300 rupees to 800 rupees now. And similarly from the broader markets as well, they say that going forward they do not see any catalyst on the upside, but they expect the pressures to continue for the next 6 months, and hence they believe that at least in the near term the IT stocks may be headed lower.